The previous year started with a lot of uncertainty in the aftermath of Black Tuesday in July 2013. We met this challenge and have achieved rather positive business results. At 641 million euros, our operating earnings reached the upper end of the forecasted range. The recovery of potash prices in the second half of the year and a significantly better result in our salt business contributed to this. The biggest driver, however, was our Fit for the Future program. This tremendous saving effort led to a positive earning effect of about 120 million euros. As promised, we will return to the established dividend policy. The K+S Board of Executive Directors and the Supervisory Board will propose to the Annual General Meeting a dividend of 90 cents per share for 2014, compared to 25 cents for 2013. This corresponds to a payout ratio of 47%, and that represents the higher end of our 40 to 50% payout range of adjusted group earnings after taxes. To improve the cost and organizational structure, Fit for the Future was launched in November 2013 with the goal of making production, administration and sales more efficient. By 2016, K+S aims to save around 500 million euros compared with previous planning for the period. We have exceeded our target for 2014. Savings added up to a good 120 million euros compared to 2013 costs. We have not only achieved savings in material and energy costs, but also through structural changes in logistics. All this has been an enormous achievement by our staff. And it is time to say thank you to everybody who was engaged. However, to remain successful in the long term, we will continue to tighten our belts. All in all, we are moving in the right direction towards achieving our targets. Our legacy project in Canada has made good progress in 2014 as well. Let me briefly outline some of the most recent milestones. We have completed the detailed engineering. The work preparation for the rail connection and the port facility in Vancouver are going according to plan. 2 pits are ready for the solution mining process, while the drilling work for 3 additional pits has been completed. Half of the total budget of 4.1 billion Canadian dollars has already been built. 3/4 of the total capital expenditure is already secured by contracts with top-performing suppliers and contractors. This has significantly reduced our procurement risk. So all in all, we are on track to commission the plant in summer 2016, and we will stick to the capex budget as planned. The global potash demand may decrease a bit compared to the record level of last year. But we should be able to sell about 7 million tons of potash and magnesium products with a moderately higher average selling price. In the salt business, we expect slightly lower volumes. Our total revenues are expected to increase moderately compared to the previous year. In terms of operating earnings, we forecast a significant increase for the full year of 2015. This is mainly driven by higher average selling prices in the potash business and a strong US dollar versus the euro.